18 months is the average. That's how long it takes to get back every dollar from an $85,000 escape room investment. But what if I told you some owners recover their money in just 8 months? Today we're diving deep into the real numbers behind escape room businesses, and you're about to discover exactly when your investment starts printing money. Let's start with something that will blow your mind. A single escape room in downtown Austin generates $42,000 per month with just 2 themed rooms. That's more than $500,000 annually from a space smaller than most apartments. But here's where it gets interesting. The initial investment for that Austin location was exactly $85,000. Sound familiar? That's our benchmark number, and we're going to break down every single penny to show you exactly where your money goes and when it comes back. First, let's talk about the elephant in the room. Location determines everything. A premium mall location in Texas costs $15,000 just for the security deposit and first month's rent. Compare that to a suburban strip mall where you might pay $4,000 for the same space. But here's the kicker. The mall location generates 3 times more walk-in traffic. Our $85,000 breakdown looks like this. $25,000 goes straight into construction and theming. That's custom wall panels, hidden compartments, LED lighting systems, and magnetic locks that respond to puzzle solutions. Professional escape room designers charge between $8,000 and $12,000 per room, and trust me, you cannot skimp on this. Why? Because amateur-looking rooms get destroyed on social media. One viral TikTok showing broken props or cheesy decorations can kill your business before it starts. Professional installations use commercial-grade materials that survive thousands of excited players grabbing, pulling, and occasionally, let's say, being overly enthusiastic. Next up, technology and control systems eat another $15,000. We're talking about computerized puzzle management, RFID sensors, automated lighting cues, surround sound systems, and security cameras in every corner. The control room alone requires 3 monitors, specialized software, and backup power systems. Here's something most people don't realize. Modern escape rooms are basically theme park attractions in miniature. Every element must be precisely timed, monitored, and reset between games. When a team solves the first puzzle, it automatically triggers the next sequence. Lights dim, music changes, doors unlock, all without human intervention. This level of automation is what separates successful rooms from amateur operations. Insurance and permits take another $5,000 up front. You need general liability, property insurance, fire department approvals, and in most states, amusement facility licenses. Don't forget ADA compliance requirements that can add unexpected costs if your space isn't properly accessible. Marketing and branding consume $8,000 in the first year. Professional website, booking system integration, Google Ads campaigns, and social media content creation. But here's a secret most owners discover too late: 70% of bookings come from word of mouth and online reviews. That initial marketing spend is crucial for generating your first 100 5-star reviews. Now for the ongoing costs that directly impact your payback timeline. Monthly rent in our Austin example runs $4,000. Staff wages average $2,500 monthly for part-time game masters. Utilities, maintenance, and supplies add another $800. Total monthly operating costs $7,300. Remember this number because it's critical for calculating profitability. But let's talk about revenue potential, and this is where things get exciting. Standard pricing is $30 per person for a 60-minute experience. Each room accommodates up to 8 players, generating $240 per game. With proper scheduling, you can run 6 games per day per room. That's $1,440 daily per room. Our Austin location operates Thursday through Sunday, 4 days weekly. 2 rooms times $1,440 times 4 days equals $11,520 weekly. Multiply by 52 weeks and Slikili. That's nearly $600,000 in annual gross revenue. But wait, there's more. Corporate team building events charge premium rates, $45 per person, with catering partnerships adding another $15 per head. Birthday parties, bachelor parties, and holiday events all command higher prices. Private bookings during off-peak hours can boost monthly revenue by 15 to 20%. Location makes or breaks these numbers. High-traffic areas with easy parking generate consistent walk-in business. Tourist zones see massive weekend surges but slower weekdays. Suburban family areas excel during school breaks and holidays. The most successful operators choose locations near restaurants, movie theaters, or shopping centers. Why? Because escape rooms are perfect before dinner or after shopping activities. Customers naturally combine experiences, and smart operators partner with nearby businesses for cross-promotion. Weather impacts indoor entertainment businesses positively. Rainy weekends see booking spikes of 30 to 40%. Summer heat drives families toward air-conditioned activities. Winter holidays bring corporate parties and gift certificate sales. But here's something that might surprise you. The most profitable escape rooms aren't always in the biggest cities. Mid-sized markets with limited entertainment options often generate better per capita revenue than oversaturated metropolitan areas. Competition matters more than population density. Regional preferences also influence success rates. Horror themes dominate in college towns and urban areas. Family-friendly adventures work better in suburban markets. Mystery and detective themes appeal to older demographics with higher disposable income. Seasonal variations create predictable revenue patterns. October through December represents peak season for most locations. Halloween drives horror room bookings through the roof. Holiday parties and gift certificates boost fourth quarter revenue by 60%. January and February are traditionally slower months. Smart operators use this time for room refreshes, maintenance, and staff training. Valentine's Day and spring break provide mid-quarter revenue bumps, but successful escape room owners think beyond just game revenue. Merchandise sales add 10 to 15% to total income. T-shirts, branded puzzles, and photos from successful escapes create additional profit streams. Some locations sell themed snacks and beverages with markup rates exceeding 200%. Private event hosting transforms slow weekday afternoons into premium revenue opportunities. Corporate training sessions, birthday parties, and social club events book months in advance. These events often include catering, extended time slots, and personalized experiences. The key insight most new owners miss? Consistent bookings matter more than peak capacity. A room that runs 4 games daily every day beats a room that runs 8 games only on weekends. Steady cash flow accelerates payback timelines and reduces financial stress. This foundation understanding sets us up for the next crucial piece of the puzzle. How do operating costs scale with revenue growth, and what happens when you hit maximum capacity? Those answers determine whether your 18-month payback becomes 8 months or stretches to 3 years. Now we're getting to the numbers that separate successful escape room owners from those who close within 2 years. And trust me, 43% of escape rooms fail because they misunderstand these crucial cost calculations. Let's dive into the real operating expenses that determine your actual profit margins. Remember our Austin example generating $42,000 monthly? The gross revenue looks impressive, but here's what most people don't see. Monthly operating cost breakdown gets granular fast. Rent consumes $4,000 monthly for that prime mall location. But rent is just the beginning. Utilities average $1,200 monthly because escape rooms require constant climate control, dramatic lighting, and electronic systems running 16 hours daily. Staffing costs will shock you. Each game requires a dedicated game master monitoring players through security cameras, providing hints, and managing the technical systems. Professional game masters earn $15 to $18 hourly. Peak weekend shifts require 2 game masters per location for safety and customer service. Monthly payroll reaches $3,500 for a well-staffed operation. Insurance premiums run $450 monthly. General liability, property coverage, and cyber liability protection for your booking systems. One customer injury lawsuit can cost more than your entire first-year revenue. Professional operators never skimp on comprehensive coverage. Maintenance and replacement costs accumulate relentlessly. Electronic locks wear out after 8,000 uses. LED lighting systems need replacement every 18 months. Props get damaged by enthusiastic players despite your best efforts. Budget $600 monthly for ongoing maintenance and replacements. Marketing expenses continue beyond your initial launch investment. Google Ads campaigns require $1,500 monthly to maintain visibility. Social media management, review response, and content creation add another $800. Seasonal promotions and special event marketing push monthly marketing costs to $2,300. Payment processing fees consume 3% of all revenue. Credit card companies, online booking platforms, and payment systems each take their cut. On $42,000 monthly revenue, processing fees alone cost $1,260. Don't forget business licenses, permits, and professional memberships. Annual Escape Room Association dues, fire department inspections, and municipal business licenses total $1,800 annually. That's $150 monthly in regulatory compliance costs. Total monthly operating expenses for our Austin location, $14,260. Wait, let me repeat that number because it's crucial. $14,260 monthly in operating costs. Against $42,000 gross revenue, that leaves $27,740 in net operating income. But we're not done yet. Taxes will take their share. Federal corporate tax, state business tax, and local sales tax reduce that profit by approximately $8,300 monthly. Your actual monthly profit, $19,440. Now we can calculate the real payback period. Initial investment, $85,000. Monthly profit after all expenses and taxes, $19,440. Payback calculation, $85,000 divided by $19,440 equals 4.4 months. Hold on, that seems impossibly fast compared to our 18-month estimate from the introduction. What's happening here? The difference lies in utilization rates and seasonal variations. Our Austin example represents peak performance during optimal conditions. Most escape rooms don't achieve maximum capacity immediately. Let's examine realistic utilization patterns for new operations. Month 1 through 3, soft opening phase. Limited marketing, building awareness, training staff, working out operational kinks. Average utilization, 30% of capacity. Monthly revenue, $12,600. Monthly expenses remain the same, $14,260. Result, losing $1,660 monthly during launch phase. Months 4 through 6, building momentum. Online reviews accumulate, word-of-mouth marketing kicks in, local partnerships develop. Average utilization, 55% of capacity. Monthly revenue, $23,100. Monthly profit after taxes, $6,400. Months 7 through 12, steady growth phase. Established customer base, repeat bookings, corporate partnerships solidifying. Average utilization, 70% of capacity. Monthly revenue, $29,400. Monthly profit after taxes, $10,800. Months 13 through 18, optimization phase. Maximum marketing effectiveness, premium pricing for peak times, expanded services. Average utilization, 85% of capacity. Monthly revenue, $35,700. Monthly profit after taxes, $15,200. Now let's recalculate the payback timeline with realistic utilization rates. First quarter, losing $4,980 total. Second quarter, earning $19,200. Third and fourth quarters earning $64,800. Year 1 total profit, $79,020. Remaining investment to recover after year 1, $5,980. At month 13 utilization levels, payback completes in month 14. 14 months represents the realistic payback timeline for a well-managed escape room operation. But location dramatically impacts these calculations. Suburban strip mall locations cut rent costs in half. Monthly rent drops to $2,000 instead of $4,000. Lower foot traffic reduces utilization rates by 15%. Net effect, similar profitability with lower revenue, but proportionally lower costs. Tourist destination locations see extreme seasonal variations. Summer months generate double average revenue. Winter months may drop to 20% capacity. Annual profitability remains strong, but cash flow becomes lumpy and unpredictable. Urban downtown locations face parking challenges that limit accessibility. Higher rent costs offset by extended operating hours and late-night bookings. Corporate events and team-building activities provide consistent weekday revenue. The most successful operators understand cost scaling effects. Adding a third room to a two-room facility increases revenue by 50%, but operating costs by only 25%. Shared reception area, game masters can monitor multiple rooms, and marketing costs spread across more capacity. Fourth and fifth rooms create economies of scale that dramatically improve profit margins. Fixed costs like rent, insurance, and base staffing get distributed across more revenue-generating assets. Professional escape room chains achieve 40 to 60% profit margins by optimizing these scaling effects. Independent operators typically achieve 25 to 40% margins, but scaling requires additional investment. Each new room costs approximately $25,000. Return on additional investment accelerates because infrastructure already exists. Third room payback, 8 months. Fourth room payback, 6 months. Fifth room payback, 4 months. Equipment financing can accelerate expansion without depleting cash reserves. Commercial lenders understand escape room business models and offer specialized financing. Interest rates typically range from 8 to 12% for established operators. Franchise opportunities provide proven systems but reduce profit margins through ongoing royalties. Franchise fees range from $40,000 to $75,000. Monthly royalties consume 4 to 8% of gross revenue. Trade-off faster market entry and proven marketing systems versus reduced long-term profitability. Independent operators maintain complete control over pricing, themes, and operational decisions. Higher initial risk but unlimited profit potential. Successful independent operators often become local entertainment brands with multiple revenue streams. The escape room industry continues evolving with new technologies and customer expectations. Virtual reality integration commands premium pricing but requires additional investment. Augmented reality experiences create unique selling propositions in competitive markets. COVID-19 accelerated demand for private bookings and enhanced sanitization protocols. Private group experiences command 20 to 30% premium pricing. Enhanced cleaning procedures add operational costs but enable premium positioning. Current industry trends favor horror and mystery themes for adult audiences. Family-friendly adventures target the growing multi-generational entertainment market. Corporate team-building experiences represent the highest profit margin segment. Successful operators continue. Here's where the magic happens. The top 10% of escape room operators generate $68,000 monthly from the same $85,000 investment. That's 62% more revenue than our Austin example. How? Revenue optimization separates amateur operators from profit-maximizing professionals, and I'm about to reveal the exact strategies they use. First, dynamic pricing transforms revenue per booking. Standard operators charge $30 per person regardless of demand. Smart operators adjust pricing based on time, day, season, and booking patterns. Peak pricing strategies boost weekend revenue dramatically. Friday and Saturday evening slots command $45 per person. Sunday afternoon family sessions remain at $30. Tuesday evening date nights drop to $25 to drive off-peak utilization. Seasonal pricing captures holiday demand surges. October horror themes charge $50 per person during Halloween season. December holiday mystery rooms add 20% premium pricing. Valentine's Day couples packages reach $60 per person with champagne service. But here's the revenue optimization secret most owners never discover: group size minimums during peak times. Instead of accepting two-person bookings on Saturday nights, require minimum four-person groups. This single policy change increases average booking value by 47%. Two people paying $45 equals $90 revenue. Four people paying $45 equals $180 revenue. Same time slot, double the income. Corporate packages unlock the highest profit margins in the industry. Standard team building experiences start at $60 per person. Add professional facilitation and post-game analysis for $80 per person. Include catering partnerships and venue rental for $120 per person. Corporate events book months in advance, providing predictable cash flow. Companies budget annually for team activities, reducing price sensitivity. Weekday bookings utilize otherwise slow periods, maximizing facility utilization. Private event hosting multiplies revenue per time slot. Birthday parties book entire facilities for flat rates starting at $800. Bachelor and bachelorette groups pay premium rates for exclusive access and customization. Corporate holiday parties command $1,500 to $3,000 for multi-hour events. Membership and loyalty programs create recurring revenue streams. Annual memberships at $199 provide unlimited bookings with advanced reservation priority. Monthly subscription services at $29 include one game plus discounts on additional visits. Corporate memberships at $499 cover quarterly team events. Gift certificate sales generate immediate cash flow without immediate costs. Holiday gift certificate promotions create December revenue spikes. Breakage rates mean 15% of gift certificates never get redeemed. That's pure profit with zero associated delivery costs. Merchandise and add-on sales boost per customer revenue. Escape room branded t-shirts with $20 retail prices cost $4 to produce. Professional escape photos sold for $15 cost $2 in printing and processing. Themed snacks and beverages mark up at 300% margins. Partnership revenue sharing opens additional income streams. Restaurant partnerships provide commission on referred dinner reservations. Hotel partnerships generate booking fees from tourist package deals. Entertainment venue cross-promotions create bundled experience packages. Advanced booking optimization maximizes facility utilization. Overbooking strategies account for 15% no-show rates. Book 115% of capacity knowing some customers won't arrive. Waitlist management converts cancellations into immediate rebookings. Time slot optimization reduces gaps between bookings. Standard 60-minute experiences plus 15-minute reset periods create awkward scheduling. Innovative operators offer 45-minute express versions during busy periods. Extended 90-minute premium experiences fill slower time slots at higher prices. Multiple room coordination creates booking efficiency. Large groups split across multiple rooms simultaneously. Birthday parties book consecutive time slots for different age groups. Corporate events utilize multiple themes for team rotation experiences. Online booking system optimization drives conversion rates. Real-time availability displays create urgency for immediate bookings. Abandoned cart recovery emails convert 23% of incomplete reservations. Mobile-optimized booking processes capture last-minute weekend decisions. Social media marketing generates bookings at fraction of traditional advertising costs. User-generated content from successful escapes provides authentic marketing material. Instagram and TikTok posts featuring dramatic moments and celebration reactions. Customer testimonials and review responses build trust with potential bookers. Influencer partnerships with local entertainment personalities. YouTube escape room challenge videos generate thousands of local impressions. Podcast sponsorships target specific demographic segments interested in puzzle entertainment. Seasonal content marketing drives booking surges. Halloween horror theme reveals generate massive engagement and sharing. Holiday puzzle hints and behind-the-scenes content maintain year-round interest. Referral programs turn satisfied customers into marketing ambassadors. Successful escapers receive discount codes for future bookings when friends visit. Corporate clients get rebates when they refer other companies for team-building events. Email marketing automation nurtures leads and encourages repeat visits. Welcome series for new subscribers includes booking incentives and theme previews. Birthday email campaigns offer special celebration packages and group discounts. Seasonal promotions target previous customers with limited-time offers. Revenue diversification reduces dependence on core escape room experiences. Puzzle merchandise sales through online stores and local retail partnerships. Custom corporate puzzle design services for companies wanting unique team challenges. Consulting services helping other entrepreneurs launch escape room businesses. Event space rental during off-peak hours. Morning business meetings in uniquely themed conference environments. Private party venue rental for celebrations requiring distinctive atmospheres. Photography session locations for content creators wanting dramatic backdrops. Educational program partnerships with schools and youth organizations. STEM education experiences combining puzzles with learning objectives. History and literature themed rooms supporting curriculum requirements. Summer camp field trip packages providing group entertainment and education. Technology integration creates premium pricing opportunities. Augmented reality elements enhance traditional puzzle solving with digital interactions. RFID tracking systems provide detailed performance analytics and personalized feedback. Mobile app integration allows players to continue puzzle experiences beyond facility visits. Virtual reality components command 50% pricing premiums over standard experiences. Hybrid physical-digital experiences appeal to tech-savvy customer segments. Remote puzzle-solving options expand market reach beyond geographic limitations. Data analytics optimization improves operational efficiency and customer targeting. Customer behavior tracking identifies optimal pricing points for maximum revenue. Booking pattern analysis reveals capacity optimization opportunities. Performance metrics guide theme development and room refresh decisions. Predictive analytics forecast seasonal demand fluctuations for staffing and inventory planning. Customer lifetime value calculations inform marketing spend allocation decisions. Now let's see how these optimization strategies impact our payback calculations. Revenue optimized facility generating $68,000 monthly profit after taxes $38,000. Payback calculation 85,000 divided by 38,000 equals 2.2 months. But that assumes immediate optimization implementation. Realistic timeline requires gradual system deployment. Months 1 through 6 basic operations with simple pricing optimization. Average monthly profit $22,000. Months 7 through 12 advanced booking systems and partnership development. Average monthly profit $30,000. Months 13 through 18 full optimization with all revenue streams active. Average monthly profit $38,000. Cumulative profit first 6 months $132,000. The optimized operation recovers initial investment in approximately 4 months, but optimization requires additional upfront investment. Advanced booking systems $5,000. Marketing automation platforms $3,000. Enhanced theming and technology $10,000. Staff training and system implementation $4,000. Total optimization investment $22,000. Combined initial investment $107,000. Payback with optimization costs approximately 5 months. The math is compelling. Standard operation 14-month payback on $85,000 investment. Optimized operation 5-month payback on $107,000 investment. Revenue optimization strategies don't just accelerate payback timelines, they create sustainable competitive advantages that compound over time. While competitors struggle with basic profitability, optimized operations generate surplus cash for rapid expansion. Multiple location development becomes feasible within 18 months instead of 3 to 5 years. But here's the truth nobody talks about in escape room investment discussions. Payback period is just the beginning. The real wealth comes from what happens after month 18. And that's where most operators fail spectacularly. Let me show you the difference between short-term recovery and long-term empire building. Our Austin location generating $68,000 monthly represents year 2 performance. But what happens in year 3, 4, and 5? Most escape rooms plateau at year 2 revenue levels and slowly decline. The elite operators multiply their success exponentially. Elite escape room operators understand market positioning creates unassailable competitive advantages. Brand recognition in local markets generates premium pricing power. Customers choose familiar brands over unknown competitors, even at higher prices. Established operations command 20 to 30% price premiums over new entrants. Reputation-based booking momentum reduces marketing costs dramatically. Word-of-mouth referrals replace paid advertising as primary customer acquisition channel. Organic social media mentions and user-generated content provide free marketing. Corporate clients develop loyalty relationships resulting in automatic annual bookings. But here's the wealth-building secret that transforms single locations into multi-million-dollar enterprises. Strategic location expansion using proven operational systems. Year 2, original location generates $450,000 annual profit. Year 3, add second location requiring $120,000 investment. Second location achieves profitability month 8 using refined operational procedures. Year 4, 2 locations generate combined $700,000 annual profit. Year 5, add third location. Total portfolio generates over $1 million annually. Scaling advantages compound with each additional location. Centralized marketing spreads costs across multiple revenue centers. Bulk purchasing power reduces per-unit costs for props, technology, and supplies. Professional management systems enable remote operation oversight. Corporate booking coordination across multiple locations captures large-scale events. Regional corporate clients book multi-location team-building experiences. Convention and tourism partnerships leverage brand recognition across market areas. But expansion requires sophisticated financial planning and risk management. Cash flow timing becomes critical with multiple location development. Each new location requires 6 months of negative cash flow during launch phase. Established locations must generate sufficient surplus to fund expansion while maintaining operations. Market saturation analysis prevents cannibalization between locations. Demographic studies identify optimal geographic spacing for multiple facilities. Drive time analysis ensures each location serves distinct customer bases. Competitive differentiation protects market share from copycat operations. Theme exclusivity within geographic markets prevents direct replication. Proprietary puzzle designs create unique experiences unavailable elsewhere. Professional set design and custom technology installations raise barriers to entry. Intellectual property development generates additional revenue streams. Licensed theme concepts sold to escape rooms in non-competing markets. Consulting services helping other operators implement successful systems. Franchise opportunities for proven theme concepts and operational procedures. Staff development and management systems enable consistent quality across locations. Game master training programs ensure uniform customer experiences. Performance incentive systems align employee goals with business profitability. Career advancement opportunities retain experienced staff and reduce turnover costs. Operational standardization creates predictable performance metrics. proven booking procedures, pricing strategies, and customer service protocols. Technology systems integration enables centralized monitoring and management. Financial reporting automation provides real-time profitability tracking across all locations. Risk diversification protects against economic downturns and market changes. Multiple revenue streams reduce dependence on core escape room experiences. Corporate events, private parties, and educational programs provide stable income during economic uncertainty. Merchandise sales, gift certificates, and membership programs generate cash flow independent of facility utilization. Geographic diversification spreads risk across different local economic conditions. Tourist markets provide different demand patterns than residential areas. Urban locations serve different customer segments than suburban facilities. Economic recession resilience through customer-based diversification. Entertainment spending contracts during recessions, but team building and celebration events continue. Corporate training budgets often increase during challenging times as companies focus on employee retention. Gift certificate sales remain strong as people seek affordable celebration options. Long-term wealth building through asset value creation. Established escape room businesses generate predictable cash flows attractive to investors. Private equity groups acquire profitable entertainment businesses for 5 to 8 times annual earnings. Strategic buyers pay premiums for market-leading positions and proven operational systems. Real estate appreciation provides additional investment returns. Successful escape room operations increase property values through commercial activity generation. Lease-to-own arrangements enable property ownership building alongside business profits. Exit strategy planning maximizes investment returns. Business valuation peaks between years 3 and 5 when operations demonstrate consistent profitability. Multiple bidder situations drive sale prices above industry standard multiples. Owner financing arrangements enable higher sale prices while generating ongoing income. Franchise conversion provides ongoing royalty income after operational exit. Brand licensing generates passive income from intellectual property developed during operations. Now let's calculate the complete wealth-building timeline. Year 1, recover initial investment. Establish operations. Net cash flow positive $60,000 after payback completion. Year 2, optimize revenue. Build brand recognition. Net cash flow $450,000 profit plus $60,000 year 1 surplus. Total accumulated $510,000. Year 3, expand to second location. Leverage operational expertise. Investment in location 2 $120,000. Combined locations net profit $600,000. Year-end accumulated wealth $990,000. Year 4, 2 location optimization. Prepare third location launch. Combined net profit $750,000. Year-end accumulated wealth $1,740,000. Year 5, 3 location portfolio generating consistent returns. Combined net profit $1,100,000. Total 5-year accumulated wealth $2,840,000. But here's the truly exciting part. Business valuation at year 5 based on $1,100,000 annual profit. Conservative 6 times earnings multiple $6,600,000 valuation. Premium market position could command 8 times earnings. $8,800,000. Total return on initial $85,000 investment over 5 years. Conservative scenario 7,647% return. Optimistic scenario 10,253% return. That's not including annual cash distributions used for personal wealth building during the 5-year period. Compare this to traditional investment alternatives. Stock market average returns 10% annually. Real estate investment 12% annually. Small business investments 15 to 20% annually. Optimized escape room investment over 1,000% annually. But remember, these returns require professional execution of every strategy we've discussed. Location selection, cost management, revenue optimization, and strategic expansion. The operators achieving these results treat escape rooms as serious business enterprises, not entertainment hobbies. They invest in professional systems, hire experienced staff, and continuously optimize operations. Most importantly, they understand that the 18-month payback period is just the entry point. The real wealth accumulation happens through systematic scaling and strategic positioning. Market conditions remain favorable for new entrants with proper preparation. Industry growth continues at 15% annually. Consumer demand for experiential entertainment shows no signs of declining. Corporate team-building markets expand as remote work creates need for in-person connection activities. Technology integration opportunities provide competitive advantages for forward-thinking operators. Augmented reality, artificial intelligence, and IoT integration create premium experiences. Data analytics enable sophisticated customer targeting and retention programs. Mobile integration expands market reach beyond traditional geographic boundaries. The escape room investment opportunity remains